So the market has reloaded with new narratives, and Bitcoin is squeezing in some of its tightest structure we've seen in weeks. At the same time, the macro world is throwing gasoline all over the fire. Coinbase just opened the gates for all Solana tokens. A Bitcoin after dark ETF only wants to trade whilst Wall Street sleeps, and $68 trillion is likely to open for Solana's future. Let's break it all down from top to bottom. Breaking news: Coinbase to allow users to trade all Solana tokens through a DEX without listings. No listings, pure permissionless data, opening up massive liquidity corridors for Solana and boosting its overall narratives. Which brings us over to the Bitcoin After Dark ETF. Yes, you heard that right. An ETF only to be traded at night. But why? Well, the answer is pretty simple, because 73% of Bitcoin's gains actually trade after market hours, of which Eric has shared a very interesting chart, concluding of intraday, after hours, and IBIT gains, with after hours being the highest in demand. Pretty wild, but the data actually backs the idea. And it's worth noting from this comment from Jim, the slippage risk will be huge, but the narrative power is even bigger. Which now brings us over to Solana's $68 trillion question, where Matt Hugan from Bitwise Invest asks if Solana is ready for $68 trillion in equities on chain. Now, Max Resnick did reply saying, "I think we're ready today. It's permissionless and you can build whatever you want." Bringing TradFi on chain is no longer a meme. Macro is hot. Now let's dive into the charts. So let us start with a fractal that bears absolutely love. Because when Bitcoin enters this RSI danger area, the doom tweets start flying. And what this fractal compares is 2021's cycle's top to today. It's evident that price is currently sitting on a massive support trend line, where in previous data we have seen significant bounces. However, it's also worth noting that the RSI is in a conflicting danger area. So the green arrows are identifying cycle lows, and these red arrows are identifying potential exhaustion. Now, at this moment in time, there is no confirmation of a top. However, the danger warnings are not to be ignored. It's also worth noting that since the cycle low in December of 2022, Bitcoin has been adhering to this ascending support line for multi-years. In fact, every time it's approached this ascending support, it has ran on to place a new all-time high. So at this moment in time, there is no confirmational signals of a top. However, we cannot ignore the danger areas in the RSI and the warning signs that are in front of our eyes. Now, let's flip the perspective, because this Bitcoin DCA chart looks clearly bullish. Let me explain why. So Bitcoin had a previous trend line of resistance from its prior cycle highs, and also in sort of May of 2024, this area was tapped for a third POC. But fast forward to November 2024, Bitcoin actually broke out of this multi-year resistance line and has retested it not once, but now for a second time for macro support. Now, within doing so, the RSI and the MACD have tapped down in areas that Bitcoin in the past, on these previous corrections, i.e. if we analyze April of 2025, when we was back down and flipped this trend line into support, we was in very similar territory in the MACD and in the RSI, and this is where we saw a significant rebound and in fact a new all-time high placed for Bitcoin. Are we going to replicate the same here? This is the bullish case to hold the trend line and push higher, which explains why this is the chart that bulls love. It shows structural integrity, a macro level of support, and that a potential base could be forming. Which now brings us over to our next fractal. We are on the daily time frame and studying EMA ribbons, where it's evident that price has been rejected at 2 points within this cluster, but we also have a level of support below, which currently sits at 87.7K. Now, there are two scenario plays here. One is we see the momentum shift and the bulls step in and Bitcoin pushes through these EMA ribbon clusters, with a second scenario of Bitcoin losing its 87.7K support and initially coming back in to fill deeper liquidity pockets. We do have the wick low, which sits roughly at 80K from back in mid to late November. What we are ultimately seeing here is a mid-trend battlefield. Now, with that being said, let's head over to our liquidity hunt map. And traders, this one is for you. Now, what this fractal actually shows is an upper sweep of liquidity in this black circle. We then ranged back into the supply zone and got a perfect retest entry to go short back down to our take profit area. We then fell back into this demand, saw another relief rally into the supply block, and are now presented with another opportunity to open short back down to our previous take profit area, back in the high 89 to low 90K territory. This offered the perfect retest entry. And it goes to show this is what the market does best: hunting liquidity on both sides of the table. In simple terms, hunt liquidity, trap traders, reverse, hunt again, expand. Overall, the message is pretty clear. Bitcoin is gearing up for expansion, but it's taking every stop along the way to get there. Which now brings us over to our last fractal of the day, where we will be analyzing Bitcoin's ascending triangle structure on the 4-hour time frame, which shows us this LTF structure is building a flat level of resistance, higher lows in ascending support, and initially being caught in a range between supply sitting roughly at 92 to 95K and demand between 89 and 88K, with support on this ascending trend line. At this moment in time, there is a lot of chop in and out at resistance and support, and initially since the last two major points of resistance on this trend line, we do have the demand that currently holds as support between 89 and 88K. So simply put, the more Bitcoin continues to retest this area and fail to break through, the more likely it is to retest into this demand and potentially back down at this higher low structure that's been forming ever since the pattern began back in November of 2025. Pretty simple mechanics. Resistance above on the resistance trend line of the ascending triangle, support below on the ascending trend line, and also a very tight range that is now indicating compression. Which now brings us to conclude that this pattern always leads to a big move. The only question is, which boundary breaks first? Which now brings us to our summary, where macro gasoline is being thrown all over the fire. Solana gets supercharged by Coinbase. Bitcoin receives an ETF for after dark hours. And Solana is getting ready for a 68 trillion in equities on chain, permissionless, enabling you to build whatever you want. Meanwhile, Bitcoin is sitting at critical support, where the cycle is showing signals that bears obsess over, and price is currently compressing in a 4-hour ascending triangle, waiting for a decision, and liquidity is being hunted, all whilst Bitcoin waits to make a macro decision, with current support sitting at $87,700. Overall, everything is tightening, everything is coiling, and the breakout, when it hits, will not be small. Thank you for tuning in. Until next time.